Alrighty, y'all. Welcome back to the Mining Pod Flash live stream edition. We've got Nick Hansen, CEO of Luxor Technology, full stack Bitcoin mining software and services company, also expanding into AI. But we won't touch on that today because we've got bigger fish to fry. Before we start, how you doing, Nick?
Doing great. Happy Monday, coming up on Christmas. Hope everybody's having a great holiday season.
Yeah, great holiday season, except for Bitcoin price and just bad headline after bad headline for miners. Unless you're someone who's not in China, this is actually great news for you. But we will go ahead and just hop on over to our story that we broke this morning, which is, let me get it up here. China Bitcoin miners shut down roughly 1.3 gigawatts in Xinjiang amid CCP scrutiny. I'm going to give some quick background on this story, and then I'm going to toss it over to Nick for second thoughts and takes. But roughly 100 exahashes of mining equipment has come offline in Xinjiang over the last few days. This is a coal-rich region with a lot of coal-fired power plants. It offers really cheap, reliable electricity for Bitcoin miners. Before China's mining ban in 2021, it was a hotbed in the dry season, and then miners would move to Sichuan in the wet season. But this 100 exahashes equates to roughly 400,000 machines, maybe 500,000. There have been a few estimates thrown around. Obviously, we don't know the exact amount. We just know roughly how many are online in the region. And as a result, in addition to inclement weather in the US leading miners to curtail, Bitcoin's hash rate has fallen about 6% over the last few days, down to 1,062 exahashes a second, down from 1,125 exahashes a second. Now, rough math, assuming these are S19 models, there might be some more efficient with higher hash rate. This would equate to roughly 1.3 to 1.63 gigawatts of nameplate capacity just for the machines. Kevin Zhang, former Foundry VP, said that it equated to roughly 2 gigawatts all in when you consider all the other infrastructure that these mines have. So, Nick, throwing it to you, what's your breakdown of exactly what's happening here and why it's happening now?
Yeah, so great intro. Got us all on the same page. So Xinjiang has been an interesting province. Actually, that's where the original China ban started. If you think back to 2021, there was these rumors of China banning mining, and then we heard from folks in that province that they were turning off their machines kind of preemptively. And that was where it all started. Was all these coal-fired plants up there. I believe it's like northern China. So since then we had heard that miners are sort of getting turned back on over the last let's call it 5-ish years since the great Chinese mining ban, and that's where I believe a lot of the hash rate growth has come. Of course, the US has grown as well, and the question is, how did this happen? It's technically banned, but China has always had this there's this proverb called "heaven is high and the emperor is far away." Basically, it's our version, or the US version, of states' rights, where they can kind of they have a lot of latitude the further away you get from Beijing, to kind of rule yourself. And so they felt like it was safe to start plugging machines back in, and as you mentioned, they plugged in a pretty significant amount of hash rate over there. And now they're kind of feeling like, okay, there may be some more scrutiny from maybe the central government, the CCP, as opposed to local governments, which they've kind of been able to get around for the time being. Sounds like they were getting brazen enough to actually start publicly posting about these mines. Like, had heard that there were folks going through Bitcoin mines on social media platforms, talking about, hey, we're mining up here. They were posting on, like, I don't know, TikTok and other things like that. Yeah, exactly. You got the point, the clip there. And so that was, all of this is very, very interesting. Another thing that's kind of interesting, sort of the meta to this, is that we've seen hash rate drop off a bit, but not as much as you would expect. And there's a pretty big discrepancy between API reported hash rate, so the amount of hash rate that the mining pools say that they have, versus what the network sees. So the mining pools, went down to somewhere around, we're reporting somewhere around 880 to 900 exahash through their API, meaning this is what the pool is reporting the hash rate is. The network never really dipped below 10,050. So there's like 1,000, or call it 150 exahash sort of unaccounted for between the network reported hash rate, which is the actual number of blocks mined, versus the API reported hash rate, which is usually not the case. Usually there's like some double counting in the APIs. The API is always typically higher than network hash rate. This is one of the first times that I've ever seen API reported hash rate lower than actual hash rate. So that means there's either hash rate online somewhere that is not reporting via API, or there's the network is just quote unquote lucky, meaning it's finding more blocks than there is hash rate to actually power that. So lots of really interesting things happening in mining. What does this mean? What does this mean for miners that are in today? You sort of mentioned earlier that if you're not in China and you're not being curtailed by winter storms here in the US, you're in a really good place because network difficulty is probably going to drop for a bit. And there's, that means you're getting more sats per hash than you would have had, maybe a month or 6 weeks ago. And that probably will continue. Those machines need to find a new home. The reason they were plugged in there is because the power is really cheap anyway. So the odds of those machines maybe ever coming back online are relatively low, or lower than I would have previously expected. Plus, hash price being super depressed means there isn't as much time pressure to get those machines back online. If we were back in the times when when hash price was $80 or $100 a petahash, there's a lot more pressure to get those machines back online. Where now it's like 36, I'll just 36, 37. I'll just wait. I'll just take them offline and leave them offline till network sort of either Bitcoin price increases or network difficulty comes down a little bit. So lots of things to think about here in Bitcoin mining, and another China ban, always interesting to the mining markets.
And always grabby for reader and viewer attention. Seems like there's a new ban every quarter, every month. It goes to show how the China mining ban of 2021 obviously didn't sweep everything out, and there's still holdovers. We'll get to that in a second. I'm curious of your read on going back to the fact that what seemed to have tipped the CCP off, or regulators, is the fact that some of these miners were publicizing their mines on TikTok and Red Note. Red Note is a popular Chinese social media app. And it seems like, according to our sourcing, a bunch of other miners saw this happening, knew that there were house calls happening. They panicked, and they might have elected to unplug themselves and kind of get ahead of it. So you probably can't answer this now because the dust is still in the air and we're waiting it to settle. But it seems to me like there's the chance that this could be a temporary halt rather than a total exodus. But we don't know yet. Is that accurate?
And it feels a lot like 2021, May 2021, when there was that big hash rate drop off, and we were like, "Oh, is this actually a ban?" Well, that was all the voluntary hash rate coming offline, and then there was like, I'll just boil it down: the government coming in and flipping the switch and saying, "Yes, you're absolutely offline." That was like the official ban. This feels a lot like the first wave, and maybe there is another like a reaffirmation or a re-ban per se, explicitly stating that Bitcoin mining is not allowed. That the folks that are plugged into Chinese politics are reading the tea leaves and understanding might be coming and are trying to get ahead of it. As you said, it is too hard to say right now. We don't really know, but it's going to become clear. I imagine it becomes clear over the next 2 to 4 weeks what the official stance is. But right now, everything that we're seeing is, as you mentioned, it's people reading the tea leaves, kind of trying to predict what's going to happen, and making their moves now to be ahead of the curve.
And it's interesting thinking about maybe there are a few gobs of exahash, 10, 20, 30, 40, however many, that are yet to come offline and are maybe targeted. And to your point, we'll know in a few weeks whether or not this is a death knell. Because as I understand it, 100 exahashes, that makes Xinjiang the largest province for Bitcoin mining in China that we know of currently. I know there's some still going on in Sichuan and pockets around the country, but it seems like this has been the biggest holdout. And if we pop on over to the global hash rate map from Hash Rate Index that y'all put up, this is a great resource. Highly recommend y'all use it as a complement to Cambridge's hash rate heat map. Cambridge uses pooled data, which can be somewhat unreliable because you're logging IP addresses of a miner's dashboard rather than where the machines are. Luxor uses a kind of bottom-up approach that uses business data, public data from Bitcoin miners, all this other stuff. So it's an estimate, but it offers a pretty good complement to the one we get from Cambridge. And y'all have, as of Q4, China's market share being 14% at 145 exahashes. I'm trying to see when I'm not sure when the hash rate snapshot for that is. So, but I'd safe to say roughly around 1 zettahash, 1,000 exahashes. So if this holds, you're talking about the vast majority of China's Bitcoin mining share, 100 exahashes. That would leave a roughly 40 left in the country. The next obvious question is, a lot of these, as you said, are older generation machines. For context for listeners, Chinese miners haven't been able to import ASICs since the China mining ban. So anything that was in the country after the ban or got smuggled in, anything that was produced in the country before they offshored the rest of their manufacturing capacity is what's operating currently. A lot of that is S19 models, some S19 XPs. These are older generations machine, 30 joules per terahash, not super competitive right now. Where do these go, if at all? I mean, Chinese miners have been setting up shop in Africa. They've gone to Ethiopia. There's kind of some constraints there. There are new electricity tariffs as a result of the influx. They're somewhat active in South America. Options there are also similarly limited. And we know that they set up pipelines in Central Asia, the CIS states, and Russia. Do you see them being able to feasibly move this hash rate to new locations? Or do you think it's just not going to be worth the hassle for a lot of them?
That's I mean, how many machines are we talking? A couple 100,000 here. That is the several $billion question, because it's not clear where those will end up going. As you mentioned, it may not be worth the effort to get them out. If all of those hit the market, there's also a lot of there's a lot of machines on the market right now. Machines are not moving as much as they used to, just because of depressed margins, meaning hash price is down, difficulty is up, etc. They may end up in the scrapyard. Hard to say right now. If you had to ask me, I would probably say Russia, just because that's been sort of the next natural place for them to go. Though Russia is a little bit of a there's a bit of cloud of war over Russia, I guess, both in the actual sense and the philosophical sense. It's really hard to say exactly what's going on inside of Russia. We don't get a lot of great information there. There is obviously a lot of mining that's being done there, but we don't have a great insight into that. I think one place that you can kind of look is sort of the pool reported hash rate, to see where these miners are being turned off. You can see F2 pool had a pretty big drop, Spider pool had a drop, Binance had a drop, Ant pool had a drop. But interestingly enough, Foundry had the biggest drop of all. But I think most of that is because of winter storms here in America. They were curtailed because of high energy prices here in the U.S. as opposed to being turned off. Now, that doesn't mean that Foundry doesn't have a big miner from that province that got turned off as well, and the curtailment is somewhat muddying the waters. But there's a lot of things going on all at the same time, and it's really hard to tell exactly what's happening. But we do know that miners are being turned off in northern China in a large capacity. We also know that a lot of machines are being turned off in the U.S. for economic reasons, just because the power prices are experiencing a spike due to winter curtailment. A lot of things in flux. Great time to be. I shouldn't say it's a great time to be a miner. Interesting time to be a miner for sure.
Well, and this is really fascinating in the sense that China's regional market, in terms of China's regional market is highly isolated in the sense of used machines probably are typically changing hands between miners in China to mine in China. But if you can't mine in China anymore, then that starts to spill out into other geographies. And this is coming at a time when the used ASIC market is already significantly under pressure. The largest buyer over the last few years and public miners are not buying anymore because they're all pivoting to AI and HPC. WhatsMiner, Bitmain have been having trouble moving inventory. You have all of these newcomers like Auradine and Proto and BitDeer who are coming to market at probably the worst time, and they're not going to be able to move inventory either. I mean, outside of the obvious that this will place pressure on the used ASIC market, what are the ramifications for this? I mean, I know some of these facilities are probably in some ways proxies for Bitmain. I have no evidence for that. Maybe they're all out of the country at this point. Does this mean that Bitmain just ends up hoovering these up and deploying them themselves? Do we just have complete catastrophe in the used ASIC market? What's your first take forecast on what this means?
So we know that the the manufacturers, including Bitmain and MicroBT being sort of the top tier, but we also know the other manufacturers have really large wafer orders. Canaan, Bitdeer, even Auradine have big wafer orders. That means they're producing a lot of new machines. So it's hard to say exactly what's going to happen. Are new machines going to start flying off the shelves? Are they going to have to bring down pricing? How does that affect used machine prices? It's hard to say right now, but certainly there's definitely going to be there is sort of a reconciliation that has to occur for mining economics to sort of balance out.
It makes me really wonder if the pressure that we're seeing on the ASIC market, coupled with the loss of demand in the AI sector, it makes me wonder if this is going to absolutely hamper some of these manufacturers' ability to actually get allocations at TSMC in the future. Because if you don't have enough cash flow and you can't put down more chips, because as I understand it, TSMC obviously has demand from basically any company.
Yeah.
They're going to want more. They're going to want you to up the ante each time you're asking for a tape out, right? And so, I mean, my kind of first gut thought here is that the current ASIC market dynamics could actually end up leading to greater concentration among Bitmain and MicroBT. They're the only people with war chests to be able to cover future tape outs. Is that wrong, or is that directionally correct?
I would say of the manufacturers that are out there, the ones that have access to public markets are the ones that may be able to contend with the private market, I guess the private entities that are Bitmain and MicroBT. So Bitdeer and Canaan have a significantly higher ability to go and acquire new capital because they are a public entity. So that could help sway them in favor, help sway their favor with TSMC being able to put those larger orders in. But it is something. Do they want to use their capital that way? Like Bitdeer is catching a bid, or maybe not now, but they had been catching a bid because of their AI HPC story. Does the market reward them for going and putting in a big order with TSMC to produce those new Bitdeer machines, the new Seal miners? Hard to say right now, but yeah, there is definitely there's going to be there's a lot of disturbances in the force. I think might have lost you, Colin, there just for a second. Got you back. Yep, audio.
Yeah, we're back. Sorry about that, y'all. I think I cut out when you said Bitdeer is catching up. Or I think you were saying something.
Bitdeer has the ability to catch up. Bitdeer and Canaan, because they have public equity, they're catching a bid. But sorry, I guess the point that I was making there was that Bitdeer was catching a bid because of the AI HPC story. They have so much contracted power that they could use for AI HPC. Do the markets allow them to hit their ATM, raise the capital that they need to make sure that they get that TSMC allocation? If so, we could see a world in which the Bitdeer takes a really big step up in relation, or Canaan even a really big step up in relation to sort of the incumbents. But there's just not enough information to say right now. But definitely a lot of, like I was saying before, there are definitely some disturbances in the force.
That's a really interesting point, and I'm glad I asked that because I hadn't thought of that perspective. And that's kind of the white pill scenario. And I think the crucial question to your point is, do investors and lenders look at how they're going to use the capital if they want to place it for a tape out? Do they look at that and say, hang on, this market is in tatters right now. Why don't you do this other thing and chase the AI golden rabbit? And obviously, it'll take a while for us to see whether or not that plays out, but something to keep an eye on. Nick, kind of maybe
it does feel like if you're investing in Bitcoin mining right now, you might be buying the bottom, which is a very interesting dichotomy or paradigm that miners always find themselves in. They are effectively forced by their shareholders to buy the top, because that's when Bitcoin mining is exciting. Everybody's making money hand over fist, and so I want to invest in that. And right now, we're seeing that in AI. The same playbook that's happened in Bitcoin mining, cycle after cycle. People get FOMO, buy the top. They're like, this is amazing. I'm making so much money, or all of these other people are making so much money. I want to deploy my capital there. Bitcoin mining feels like it could be at a bottom where, we're looking at, summer of 22, summer of 2017 timeframe, or sorry, summer of 2018 timeframes where, prices are really, really depressed. And if you're able to deploy capital now to Bitcoin mining, and Bitcoin mining has a resurgence, which maybe it does because we've got this big difficulty bear in front of us, there is opportunity now to really kind of quote unquote buy the bottom of Bitcoin mining.
Well, how's that for a little bull porn for you guys? Nick, last question before we wrap up. And this maybe should have been addressed beforehand, but it's not as interesting as the actual news. How are miners still operating in China at all? I understand that there is kind of a favoritism system in place and kind of a patronage system in place where if you're close enough to the right people, you can fly under the radar. Other miners are so brazen. I've heard that as long as it's under a megawatt or two, they can kind of fly by night and operate under the shadows. What's your read on how there's this much hash rate still left in a country that ostensibly banned this practice, 4 years ago?
Yeah. Heaven is high and the emperor is far away. You can, the further you are away from Beijing, the more local latitude you have. At least this is my understanding. Obviously, I'm not a Chinese native, only been to China once, but that's the word on the street, or that's what we hear, is that, you can, the CCP isn't looking at every single data center or power consumer inside of China. China's a huge place. So as you get further away from, the control of the central government, you can start to, as you mentioned, get some deals with local governments. Say, hey, it's, you can almost look at it like cannabis in the US. It's technically federally illegal, but states have legalized it, and you can go there, do whatever it is you're going to do in those states, and the states will turn a blind eye. And then the government's like, hey, we'll let the states kind of deal with this on their own. I would say it's probably very similar to that. But now the government has decided, well, this is not actually going to be the case anymore. So if you do have a pot shop somewhere down on Colfax in Denver, you should probably shut it down before the DEA shows up.
China has a different kind of hash that they're trying to regulate over there than we do here in the States.
Yep.
Hey, Nick, thanks so much for joining. And for all of our listeners, appreciate y'all tuning in. Check out the original article on Blockspace and head over to Hash Rate Index. You can go to data.hashrateindex.com to check out data on hash rate, hash price. You can look at pool data, and you can kind of digest this as the data comes in real time to see how this is impacting the network. But Nick, thanks so much for joining. Merry Christmas to you and all the folks at Luxor. Hope you have a good week, man.
All right. Thank you, guys. Thank you to the Blockspace listeners as well.
Take care, y'all.